Good morning and thanks so much for tuning in. This is NDTV Profit and my name is Alex Mathew. You're watching All You Need to Know. Let's get to the headlines. IMF upgrades India's GDP growth forecast to 6.7% as part of a global growth upgrade. The fund also sees China's growth picking up. US markets trade mixed amid caution ahead of the Fed outcome. Shares of Alphabet as well as Microsoft slide on results. The Dow, however, notches a second straight record close. Asian markets follow suit. Early risers open mixed as China and Australia await key economic data. Tata Consultancy Services signs a new 15-year deal with Aviva plc to service its 5.5 million customers. The deal could be worth over $1 billion. Swiggy's losses increased to over 4,000 crore rupees despite a 45% surge in revenue. First up, it's good news for India's economy. A day before the union budget, the International Monetary Fund has revised its growth forecast to 6.7% in the current financial year. That's 40 basis points higher than its previous forecast. The IMF has also revised the forecast for FY25 and 26 by 20 basis points each, and now projects the GDP to grow 6.5% in both of those financial years. In international news, US markets closed mixed as investors await the first interest rate decision of 2024. The Dow notched a second straight record close, while the S&P 500 and the Nasdaq fell about 0.06% or thereabouts. It's flat, more or less, and about 0.7% respectively. Asian markets have followed suit with the early risers in trade mixed. In fact, right now you're seeing red across the board. The Nikkei 225 trading with cuts of about 0.7% and Shanghai also losing ground. Narrow cuts for the Hang Seng as we speak. In Japan, you've seen a rebound in factory output in December, though it was still below the consensus estimates. Let's turn to the Indian equity markets and talk about the latest cues from the F&O space. You've seen a lot of chop and churn over the last few sessions. In fact, you saw a bit of selling in trade yesterday. Agam's here to break down the latest data for you. Agam, I guess caution is what is prevailing across the board globally.
Yeah.
What are the cues heading into trade today for us?
Right. Again, Alex, it's not going to be a very easy market to trade. As you've already suggested, it has been a choppy one over the past few weeks. And, well, there's a likelihood that that choppiness could come through until we finally have the outcome of the vote on account that comes up tomorrow. Of course, you know, the fact that we do have weekly expiries now coming in doesn't really help. But we certainly did have a lot of traction when it comes to markets yesterday. And even as the index, that is the Nifty, fell by around 1%, we saw a lot of traders take off their positions there, which was indicated by a near 9% decline in OI. As far as the Nifty futures go, for the bank Nifty futures, again, we didn't see too much change in the underlying, nor did we see too much change as far as its open interest is concerned. Now, in terms of the range that we are keeping an eye on as far as the Nifty goes, well, yesterday, of course, we saw a lot of writing around 21,600 and 21,700. Well, you know, considering the Nifty came off to a certain extent, and I reckon it is going to be a hard one to call, because at this point in time, in the run-up to the budget, there will not just be writing, but a lot of buying as far as options are concerned as well. But where does that leave us when it comes to range based on max OI on the Nifty? That hasn't really changed on the higher end, but we are looking at a considerable amount of writing around the 21,700 through 22,000 calls, and on the lower end we don't have as much traction as far as puts go, which also begs the question of whether or not we can in fact expect a little bit more weakness based on max OI right now. It is also the bank Nifty expiry, and we will be talking about that as well. You know, the sort of a kind of a pivot is around 44,500, and that's where we're seeing significant amount of traction as far as calls go. On the lower end, continue to keep an eye on 45,000, which at the moment seems unlikely it could be breached. But, you know, these days we have about a good 500, 600 point move. So it isn't out of, you know, the works completely. But that said, let's talk about stocks then. And we saw longs building up in Concord and Z Entertainment, and shorts building in Coromandel International, Bajaj Finance reacting to earnings and Chambal Fertilizers. And on the other hand, saw longs unwinding in Coforge, Gales and MCX. About a short covering for JK Cement and Syngene International. And once again, Alex, today is the Bank Nifty weekly options expiry. I reckon banking counters once again will remain focused today.
All right. Thanks so much, Agam, for bringing us those details. From the IT space, Tata Consultancy Services is likely to be active in trade today because it signed a new 15-year deal with Aviva. In the release that was sent out yesterday, there was no mention of the quantum of the deal, but there are indications as to how big it could be. Tushar is joining in to tell you about the significance and also the nitty-gritties of it. Tushar, you've picked up what the deal value could potentially be. Is this significant, and how does one look at it in the context of deal-making for IT companies?
Absolutely, Alex. First of all, good morning to you and Agam both. So this is actually a renewal contract with the UK's biggest insurer, Aviva PLC. We have to remember that TCS and Aviva have been in a deal for 20 years. Now, this particular deal will push the TCS-Aviva alliance to about 2039. Now, while TCS did not disclose the financial details of the transaction, our conversations with analysts indicated that TCS stands to gain at least $100 million every year from this particular deal. A Mint report also indicated that the deal could be valued at $2.5 billion, which would be actually the largest outsourcing contract that TCS has won in its lifetime. So what essentially that means for TCS's earnings. TCS's dollar revenue growth so far this fiscal in the 9 months to December 31st rose about 4.7%. TCS now needs about only $146 million to beat its FY23 growth numbers. That is the key number that is there. So estimating that it's going to earn about $100 million, and if these incremental revenues step in at Q4, that's a plus for TCS. We have to also remember that these compare with the TCS Transamerica deal that was scrapped last June. That was a $2 billion deal spread over 10 years. And we also have to remember that TCS has struck another deal with an insurer, US-based insurer, UK-based insurer called Nest at $1.99 billion over 18 years. In the Nest case, the company is handling 10 million accounts. In the case of Aviva's new account, they just run 5.5 million accounts. So essentially, almost half of it. So we are ballparking the TCS Aviva deal, the new one, at $1.5 billion. Alex.
Fantastic. Thanks so much for bringing us those details. Tushar, and it bodes well for the rest of the IT pack as well, if the largest IT company manages to strike a deal. Let's talk about the pharma space and earnings then. And Dr. Reddy's Laboratories has reported an 11% growth in net profit for the third quarter. But I'm sure there's a lot more to focus on than just that headline number. Monal is joining in with all of the fine print. Monal, what can you tell us about the numbers? Good morning.
Good morning, Alex. Yes. Profits did come up, but they were pretty much in line with the estimates while they were up 11%. Margins came in slightly lower at 28.1 on higher SG&A expenses is what the analysts are saying. The North American market did report a growth of 9%, but India market was muted at around 5%. Now, management in conversation with us did tell us that they are expecting a high single-digit growth to continue. And we're aiming at a double-digit growth, which will outpace the India market very soon. They're also aspiring to be in the top 5 in India. Now, all said and done, analysts are still not as positive on the stock. Citi has maintained its sell version, saying that the revenue contribution to the US business has been very high. And we're not seeing any growth in the core generic business of Dr. Reddy's. Product launches that the company has planned will just more or less offset the price erosion effect in US and may not go beyond that to give the additional boost. Now, if you look at the India market, they're saying that the sustained underperformance is highly unlikely to be supported. So IIFL Securities has maintained a reduce with a price target of 5,480.
Sorry, Monal, sorry to cut you off. We can't really make out what you're saying. There's a bit of an issue with your audio line. Unfortunately, we have to stop that there. But we were essentially talking about the expectations for Dr. Reddy's Laboratories and what some of the brokerages have said. But there's also Sun Pharma to take into account. And it is going to come out with its Q3 numbers later today. You have the PAT that is seen up about 14% at about 2,465 crore rupees. And the revenue seen gaining as much as 10% in the quarter to about 12,340 crore rupees. Margins are expected to come in slightly lower than the comparable quarter, or rather more or less in line with the same quarter that we're looking at 26.8% compared with 26.7% earlier. Among the key monitorables that you would want to look forward to, of course, US revenue growth and specialty growth ex-Taro is what you would want to focus on. The margins, of course, and the guidance going forward. The update, of course, on the alopecia drug, which is, and I'm pretty sure that I'm going to say this wrong, but this is the reason why I don't track pharma, ladies and gentlemen. Updates on new launches as well is what we're looking at. We will get Monal to get you more details over the course of the day, though. Let's talk about Larsen and Toubro then, and this is a company that has reported its profit as well as revenue and much higher than what was expected as well, I believe. We've got Vikas joining in to give you some perspective on that. Vikas, what can you tell us?
Yeah, right, Alex. Good morning. As you rightly said, they have reported earnings which are better than the estimates, what the analysts had estimated. And they have beaten it by no good numbers as far as the profits and revenues are concerned. But it's not as good as on the EBITDA margin side, mostly on the strong execution in the project and the manufacturing segment that the company has undertaken in this quarter. The order inflows, mostly from the international orders, has helped the company. Almost 67% of the orders have come from Middle East and other international geographies where they are present. Although domestic has not done well, mostly because it's an election season, and the company expects that from second quarter of FY25 domestic orders will again pick up. But till then, it's the international orders which have been helping the company, and the executions are taking place there in the projects and the manufacturing space mostly. As far as their margins are concerned, the company believes that this is likely to be hit or will continue to be hit for at least for some quarters. There has been sequential recovery in that, although, but from FY25 onwards, the company sees that these legacy orders where the margins were low, especially from the COVID period, they will start to come up once the execution will happen in that. There also the performance will improve. As far as the key monitorables or takeaways from this earnings was that the company has raised the guidance, or they have raised the guidance for order inflows as well as for the revenues. Order inflow, they expect guidance of 20% in FY24, which was earlier 10 to 12%, and revenues, they expect that this will be in the high teens.
Okay. Yeah. All got it. Thanks so much, Vikas, for breaking that down for us. Stock was under a little bit of selling pressure yesterday, but remember, it's had a stellar run over the last 12 months or so, and I'm looking at gains of over 70% in that period. Let's talk about Maruti Suzuki as well then. Its market capitalization being eclipsed by Tata Motors in trade yesterday. But of course, the earnings are what we're focusing on today for Maruti Suzuki. And we've got Vinay joining in to give you some perspective on what to expect. Vinay, what can you tell us? Morning.
Well, according to Bloomberg estimates, the profit is likely to rise 27% on higher sales and increased share of SUVs in these overall sales. So the overall sales in the quarter rose 7.6% year on year to 5.01 lakh units, and that is going to help the company in the quarter. And a combination of higher volumes and rise in average ticket prices due to increased share of SUVs in the overall sales will aid the company's performance in the quarter. Revenue is likely to rise 20%, and margin may expand to 11.7% compared with 10.2% last year. And this is also due to softer commodity prices that we have seen in the quarter for the automobile companies.
Got it. Thanks so much, Vinay, for bringing us those details. We have to slip into a very quick break. We've got stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. And earnings and budget, as well as the Fed, all of them taking center stage. But don't forget, there's other stocks to watch as well on the back of corporate updates. And we've got Anushi joining in to tell you about some of those. Some of those, of course, are order wins. Anushi, what can you tell us?
Right. So 5 stocks to watch for today. First one being Glenmark Pharma. This is after Glenmark and Ichnos has made a collaboration for the cancer development research. So with this, now there are 3 oncology molecules in already in clinical trials. So with this, two have already received the orphan drug designation from US FDA. Apart from this, so the main aim is to bring down the investment research cost for Glenmark Pharma, so that would be in focus. Next on the list is KPI Green Energy, which is in focus after it received a 5 megawatt of order win for executing a solar power project under its captive segment. So this project is estimated to be completed within FY25 under various tranches. Next on the list is NTPC, a big news over here with the company's unit NTPC Green Energy signing an MOU with the Maharashtra government for about 80,000 crore over the next 5 years for development of green hydrogen projects. Do note that NTPC already has a target of achieving 60 gigawatts by 2032. Then on the list is Paris Defense, Space and Technologies, as it has signed a licensing agreement with IRDA for manufacturing and selling the weaponization of handheld thermal imager to the Indian Armed Forces over the next years. And last on the list is Ganesh Ecosphere, which is in news after it opened its QIP to raise about 355 crore yesterday. So the indicative issue price is at about 995, which is at a discount of about 6% to yesterday's closing price.
All right. Thanks so much, Anushi, for taking us through those stocks. And of course, Jubilant FoodWorks is also going to be one to watch in trade today. It's going to be posting its third quarter numbers. And this is, I believe it is the first company in the QSR space, large company at that, to report its numbers for the third quarter. It's not expected to be a very strong one at that. And Mahima is joining in to tell you why. Mahima, morning. What can you tell us about Jubilant?
Morning, Alex. So as you rightly mentioned, the Q3 FY24 performance is expected to be a bit muted because of inflationary pressure and high operating expenses. The company plans to open 60 plus stores in Q3. So this will definitely boost the revenue. However, margins are expected to be under pressure because the cost optimization efforts that they've initiated are in a very initial stage. So they have operational Vijay, which they're taking up to optimize their cost, monitor them and structure them in a process way. But however, they're in a very initial stage. Also, Domino's continues to be a dominant position in the market. However, the competition has been very stiff in the QSR space. Online orders from various QSR restaurants are rising, and that is why it's posing a stiff competition to Domino's. So basically, key things to watch out for today in their Q3 results will be store guidance 1, cost optimization efforts 2, and outlook on the demand environment.
All right. Thanks so much, Mahima, for telling us about Jubilant FoodWorks. Let's talk about more earnings then. SRF, VIP Industries, as well as Voltas reported their third quarter numbers yesterday. And Varsha is joining in to tell you about how they stood. Varsha, what can you tell us? Morning.
Good morning, Alex. So we'll be discussing the 3 companies that you mentioned where numbers have missed the estimates. So starting with SRF, where expectations of an improvement quarter on quarter did not materialize due to drop in chemical business, and also their packing division also dropped almost 50%, and other businesses dipped quarter on quarter too. Now fluorochemical was impacted by seasonality, and industrial chemical was impacted due to lower demand. Also, if you see, technical textiles saw improvement in profitability due to higher demand. Now, if you see, revenue miss led to EBITDA miss also, and management guides for much improved performance in fourth quarter. Then we have VIP Industries, where you see there was revenue growth of 4% with decrease in EBITDA by 28%, while other expenses grew 48%. Now, other expenses with respect to revenue was 32% versus 23% last year, and this is due to on account of increased freight and accelerated spends on e-commerce. Then lastly, we we have Voltas where revenue rose 31%, but there was a net loss. Now, this was due to higher cost. Expenses related to raw material, jobs and services climbed almost 56%, driving total cost up by 35%. While in last year, December, Voltas had an exceptional item which led to loss of almost 110 crores.
All right, thanks, Varsha, for that. Now, Bharat Petroleum has been on quite the run. In fact, as part of the OMC pack that is doing well in trade, it has gained about 11.9% over the last month itself. It was up in trade yesterday as well. Turns out brokerage firms are positive on BPCL going forward as well. Mika is joining in to tell you about some of those details. Mika, morning. What can you tell us?
Yes, so the stock is up around 5% in the last 5 days and 11% in the last month, as you mentioned. And this is despite the fall in the EBITDA and profitability of the company in Q3, because the results were still above estimates. Now we have three brokerage notes: Motilal Oswal, MK and Citi. While Motilal Oswal is neutral, MK and Citi do have a buy rating on the stock, and the target price indicates an upside of anywhere ranging from 6% to 38%. Now Motilal said that the Q3 refining as well as marketing margins were 14% and 9% above their estimates, and there's been a rebound in the Singapore GRMs, which is a benchmark for the OMCs, and this will help the refining performance of the company in Q4. And the company is also expected to have higher refining margins after the refinery production optimizations are set to be completed in Q4. The neutral rating is only due to the minimal volume growth that is expected over the next 2 years and the earnings volatility. We have MK, which also does expect higher gross refining margins in Q3, in Q4 itself, and it also expects the rights issue closure by March 24. And Citi has also raised its EBITDA estimate by 18%, and it also expects the stock price to catch up, as BPCL has been the underperformer compared to the two OMCs. All right, thanks so much, Mika, for that.
That brings us to the end of this particular edition of All You Need to Know, but we're now just hours before hours. There's just hours for the budget to be displayed and to be presented. And before we head to that event, take a look at what TV Narendran of Tata Steel has to say about his expectations.
Focus on infrastructure. I think that's very important for us. Helps steel demand, also helps us reducing the cost of doing business. And of course, if the imports from China continues to grow, we expect some support from the government, as was provided in 2015.
welcome to